All right, you know where we start here at market index, CMI. This continues to trickle up. Last week we were at a 136, we're at a 138. Continues to go up. Again, this is not micro, this is macro. This is what we see in all of Arizona, all counties, all zip codes, all price points, all sorts of homes, meaning single family, manufactured condos, foreclosures, REOs, short sales, all of it. Okay, but when we look at this, check this out. This is months of supply. Month of supply right here. Now, if we read this, I'll read it. I'll read it for you. We have well below 2 months of supply, consistent with the seller's market, and less than half the 3.8 months we saw at the end of November. If you have clients who think prices are going to fall further, ask them to explain where the new supply is going to come from that would cause that to happen. Prices are unlikely to fall unless supply rises to more than 3 months. Foreclosures remain very scarce, and single-family home builders have dropped their production plans sharply, driven by an abundance of caution. With prices for new homes holding up well, they will probably regret that caution over the next several months. Very interesting. If we continue on here, this kind of is not relevant to this, but perhaps owners of short-term rentals will tire of that business now that occupancy rates are well down from a year ago. Many owners were disappointed with their receipts from the Super Bowl. We seem to have an excess of short-term rental supply, which means owners are having to compete with each other on price for short-term tenants. As we head into the low season for holiday rentals, we may see some get sold off. More likely, they will be converted to long-term rentals where the rental prices are much lower, but the percentage occupancy is likely to be higher. Demand for long-term rentals is generally more reliable and consistent. If I owned a short-term rental property with a disappointing occupancy rate, I don't, in parentheses, I would wait for higher prices before considering selling. So conversion to a long-term rental would be my first step. Okay, so if we talk about the first half of what I just read, we're looking at months of supply, right? This is the supply and demand that we keep talking about. And if you're paying attention to anything that I'm talking about into the marketplace, that's all I'm talking about is supply and demand and how we don't have the supply for the demand. And I'm not even saying demand is high, right? But in contrast to the supply that we have, demand is very high. Now we're looking at this pink line right here. This is this year. Months of supply peaked in late January, early February, right here. Boop. And then we've just been trickling down. So this looks like a slight bump, which is good. I personally don't want to see supply go down further, right? If we look at 2021, this blue line down here when things were really crazy, 2020, like we're at supply May 2020, and then we went into our craze right after that, right? This is COVID time. Boom, boom, boom. Supply peaked because people thought the zombies were coming. And then once we realized what it was, boom, dropped. And then inventory stayed low for the next year and a half. So here's my concern, if supply continues to go down and interest rates continue to stay up, we're going to have a real affordability problem. And I'm really curious on how that's going to affect the market because we're starting to see more and more competition for listings, right? We're seeing multiple offers all the time now. We're starting to see crazy things. I had to write an offer where we had to waive appraisal contingency. Haven't done that in over a year. And we won, but still crazy shit. Waiving that appraisal contingency is a big deal. So if this continues to go down, how is it going to affect the average buyer? You're going to need to have cash in the bank once again to be able to compete. And this is that little window I was talking about in late 2022. Buyers had this sweet little window when, if we look at this right here, when inventory was high and people were not buying homes and you could get homes for significantly under list with concessions. But that's just not going to be the case in 4 weeks. In 4 weeks, most likely, this is going to continue driving down because as you see here, single-family home builders have dropped their production plans sharply, driven by an abundance of caution. So where are the homes going to come from? Where is the supply going to come from? It's not coming from builders, right? We know that they're behind. And if they hit the brakes again, which this is saying they have, then where's that supply going to come from? It's not gonna happen. We're not gonna have the supply to meet the demand, which is going to cause prices to continue to go up and cause a lot of competition. And the competition is going to be drastically different than it was a year and a half ago, because interest rates then were 3%. Now they're 6%, right? And for the last 12 months, we've been able to get concessions to help with that 6% and 7% rate. Now we won't be able to do that. And so how is that going to affect our buying pool of your average buyer? You know, typically people have cash on hand from selling their house, and they have a lump sum of cash that they have accessible, right? So if they sell their house, they make 200 grand, they can use that and go over the appraised value, right? They can waive their contingency and they have cash to meet the difference. If people aren't selling their homes because they don't want to walk from their 3% rate and walk into a 6%, where are they going to have that abundance of cash to go over list? And who has that? Like, there's going to be people. Is it going to be investors? Is it going to be hedge funds? Is it just going to be like well-off people, people who have a higher income than others? I don't know. We'll see. So very interesting to see that. Anyway, keep on moving. Okay, so this is from 4 days ago, April 6th. Wait, April 9th. Man, they posted on Easter. Good for them. Okay, this is the CMI broken down per city. Chandler continues to be the leader there. They've been leading for quite some time. It's interesting that Gilbert is so far behind than Chandler to me. I'm not really sure why Chandler's booming. I like Chandler, don't get me wrong. And Queen Creek is still lagging. So I wonder when we're going to start seeing like Maricopa got a 17% bump. Queen Creek only got a 4%. So my prediction on Queen Creek was drastically wrong. Doesn't happen very often. Goodyear, like I wonder when we're going to start seeing the pressure from the internal cities start to ripple effect into the outskirts. Let's see what this says. The market continues to improve for sellers, with the average CMI up 9.7 over the last month. The improvement has started accelerating again, having been 9%. Improvement has started accelerating, having been 9% last week. Only one city, Paradise Valley, saw a decline in its CMI over the past month, but Paradise Valley has also started to improve for sellers over the last 2 weeks, with a significant and sudden rise in demand. The positive trend is more widespread now, but not quite so intense, with only Gilbert showing a monthly CMI increase of 20 or more. However, the pace of improvement is still impressive given the affordability constraints we are facing. Chandler, Maricopa, Goodyear, Peoria, Glendale, Phoenix, Mesa, Surprise, and Scottsdale have all risen 12% or more over the last month. We have 14 cities that are a seller's market, zero balance, and 3 buyer's markets. It is clear that in contrast to the COVID years, more remote locations are easier to buy than central ones. Competition among buyers are getting stiff in the most affordable central locations, and supply is quickly dropping to extremely low levels. Examples include El Mirage, Tolleson. Upward pressure on pricing is starting to build. Bargains are getting harder to find and are most confined to other outer areas of Casa Grande, Buckeye, Santan Valley. General public appears to underestimate how quickly the housing market is recovering from a brief correction of 2022. Buyers needs to come to terms with this, or they will be left in the dust. Okay, like the way that's written is a little doom and gloom, especially that last line, right? The general public appears to underestimate how quickly the housing market is recovering from the brief correction of 2022. Buyers need to come to terms with this, or they will be left in the dust. So if rates stay where they're staying, and now there's a lot of people saying they are, at least until the end of the year. Before we were hoping for summer, we'll see. But now they're saying potentially by the end of the year, they're going to start coming down. If they stay there and home prices continue to go up, like you're going to have first-time home buyers paying $3,200 a month for a mortgage. And they're going to have to use cash to get into that house. I wonder how that's going to affect the future. Anyway, let's look at, so let's dive into some like specifics here. So if I want to get rid of all cities, let's just go to Chandler, since that's kind of the leader here. We have 1 month supply in Chandler. So for those who don't know what that means, a month of supply means how long until we're at 0 homes on inventory if no more homes were listed, right? If there were no more listings for the next month and we kept selling at the rate we're selling, we would have 0 homes in Chandler to sell in 1 month. That's absolutely crazy. This is November. We had 3.4. That's drastic, man. Like, that's drastic. So let's go Chandler. Let's just go like East Valley, right? Let's go Chandler. Let's go, not Fountain Hills. Get rid of there. Gilbert. Mesa. Queen Creek. Tempe. Queen Creek is going to help this number. Let's get rid of Queen Creek. Is that it? I think that's it. 1.2 months of inventory for East Valley. Not good. Need more listings. That's the moral of the story. Need more listings. Is the market going to crash? Where's the inventory going to come from? All right, guys. So you have a good week, and I'll call me if you need me.